We were talking about maybe some of these Fed people that flip-flop. They were doves or hawks. They go back and forth. They go to Greg Branch's credit. You haven't been that friendly towards equities. And then when we had that nice move that sort of ended in early August, you were still, even in early August, just, I still don't really feel that great about it. And now it's sort of come back into your domain where you're kind of looking right again, that things maybe aren't that great for the equity markets. Are you changing now? You feeling better about them, or you still think that there's either flat or down in the future?
Well, had you asked me that question last week, I probably would have changed my posture to some degree, or before last week, I should say. But really what it boils down to for me, Joe, is I have 3 tent poles that I measure my posture by. And we have done really little against any of the 3. The first is that I've been higher and longer than the street, as you well know. It was to great shock and awe, I guess, 14 months ago when I said that I predicted that the terminal rate would be 6%. And here we are within 50 basis points of that. So there's progress there. But I've been reading a copious amount of notes coming out saying that we'll have rate cuts next year. And I just don't see how we degrade that fast to get to cuts next year. So I'm still longer. On the estimate front, there too, consensus has come down to my view to some degree. Recall that I've always, from the beginning of this year, said that the fourth quarter and the 2024 estimates were way too high. And over the last 5 weeks, consensus has chopped the fourth quarter estimates in half, but we've done precious little on 2024. And so I think those estimates need to come down a good 15 to 20%. So that keeps me bearish as well. Lastly is valuation. We had come in from beginning of the year about an 18 times multiple on consensus numbers to around a 17 times, but that's reinflated with last week's gains. And so, but that will naturally come down as those other tent poles kind of fold. And so there's still, in my mind, work to do in terms of consensus catching up where the macro is. And it's very hard for me to change my posture while we have that work left to do.
Well, so you've got, you figure earnings estimates are still too high for next year. That's when and multiples are high, so that's not a great combination. What did you mean that if I spoke to you a week ago, you might have changed your tune? What would your tune have been a week ago?
So before the run-up, we were at 17 times. Consensus was coming down fairly aggressively. I thought that directionally, everything was headed in a direction where consensus view and my view would match. More importantly, I think, and what you're about to hear probably in your next segment, and what we heard from Neil Kashkari is, I think that there's a downside surprise with regard to the Fed. Again, I saw a copious note saying that the Fed is done, that we're going to have rate cuts, and I don't see how they're done here. And I think that Neil has come out and tried to give guidance. I think that Jerome Powell probably thought he was giving guidance when he said we need to see further, keyword, further softening of the labor market and below trend growth. We've seen neither of those things. And while they thought that the bond market was going to do the work for them, yields have come in across the curve. And so yields have come in, the market has rebounded, the dollar is softening. I think the Fed now realizes this is going to be left for them to do.
Yeah, okay, so you still think there's a 6% terminal rate, and does that, are we still able to avoid a hard landing, even if we get to 6?
I'm not certain about the latter, but I am certain about the former, and I think we'll need to get there first. And that is not what the market's expecting right now, Joe. The probabilities for just even another single hike were 0% 2 weeks ago. Now, part of consensus is coming around in the low teens that there's a probability of a hike before in the December meeting, a slightly higher mid-teens possibility for January. But this was 0 a couple of weeks ago. And so this is going to be a downside surprise. I'm not certain that 50 basis points more puts us into Armageddon, but it certainly will increase the slowing of the economy, particularly on the manufacturing side, which we see has contracted for 12 straight months now. But the services side is where we need to rein it in a bit, and we'll see if that has an impact there.
When do you think you will go bullish? I mean, just in terms of time, think it'll be 6 months, a year, never? When do you think, Greg?
Pure speculation on my part. I actually thought it would be this year, Joe. But in the beginning of the year, we had unforeseen stimulus in a variety of ways. We had relief rallies, and we had people extrapolating numbers as though it was a straight line delineation, whether it's jobs or whether it's disinflation, which is just not the case. Well, I am on tape. I was going to say, if I had to put this on tape, I think it's going to take me about 6 to 8 months, because
Really?
I think it's going to take us that amount. Yeah, I think it's going to take us that amount of time for my views and consensus
Right.
views to align.
All right.
I
Well,
don't think we're going to get past the rate cut hopes before that.
well,